Happy Monday, traders. Okay, so this weekend in the Middle East, we have had a de-escalation. After 2 straight weeks of the US bombing Iran, they have finally halted the strikes. On the Iranian side, they've also stopped their bombing campaign and said that they would stop as long as the US is on hold. So obviously, look, this is a positive development, but look, we have been here many times before, so it's a little bit hard to get excited about it. But in any case, look, the market loves it. So what are we seeing? We're seeing crude oil have a massive gap lower on the open. So we closed last week above $90, around 91.5, and crude oil's been smashed down, gapped over 7%, and back down to make lows in the low 80s. But look, I would suggest that I would not be chasing crude fresh short at these sort of levels. For the simple fact is that look, we have got no confirmation that the parties are even coming together to talk, or any potential deals, etc. The buyers certainly are going to be sitting there around $80 and below. So I'd imagine that is going to be very solid support. So I would suggest that this week we're probably going to be bouncing around in a range of say $80 up to say $90, while the market waits for more news out of the Middle East. But yes, the bias is probably maybe buying this dip. For other markets at the moment, US equity markets, yes, they did gap higher. S&P and NASDAQ US equities are futures. They're up about 1% at the moment. And look, I'd imagine they will stay bid, with oil doing what it's doing at the moment. If we look at gold, yes, it also enjoyed this news. Gold gapped higher, and it's up about 1% at the moment, and we're trading around 4,100. But look, in the last month, gold really has been a range trade. We've range traded pretty much 200 points, so from around 4,000 up to 4,200. So where we are at the moment at 4,100 is pretty much mid-range. So look, it's hard to get excited about gold for a directional trade until we either break above 4,200 or break below 4,000. Until then, I'd suggest probably just continue to trade that wider range. As far as the US dollar is concerned, it was the only market really that hasn't done much at all on the open. So DXY is still firmly above 101. It's around 101.30. And dollar yen still can't get any relief even from what's these positive developments and market trading risk on. So that's still trading around 163.50, pushing still near those new 40-year highs. This week we do have quite a lot on. We've got a lot of central bank meetings. The most important one is going to be the Fed. So we've got that on Wednesday. Look, the market is looking for the Fed to be on hold. So there's a probability of 30% chance the market's pricing in that the Fed may actually hike rates at this meeting. Look, I think those odds are a little bit low. I think that probably the odds should be closer to a coin flip, 50-50 probability of the actual Fed hiking. Kevin Walsh has been quite hawkish. And look, we don't have a meeting in August. Next time the Fed meets is going to be in September. So I think that potentially, yes, we could see something happen at this meeting. So let's see. Obviously, if he does raise rates, it's going to change a lot of the market. But I'd imagine it's going to be a hawkish hold if he doesn't raise rates. So Wednesday, certainly a key day for markets. There's also a Bank of England meeting afterwards. They're supposed to be on hold as well. And Friday, a Bank of Japan meeting. They did raise rates at their last meeting. Market is looking for Bank of Japan to be on hold at this meeting. But look, they do have a massive problem with the yen at 40-year highs, and it at the moment is certainly getting absolutely no relief from anything. So Bank of Japan is one of those central banks that occasionally can surprise. And would it surprise them actually raising rates again this meeting to try to help the yen? Possibly. So I'd be watching that meeting with interest. The other economic data that we have this week that's important for local markets here in Australia is on Wednesday we do have the quarterly CPI data. Market's going to be looking at the RBA trimmed mean. That is supposed to go from 3.5%. Market's expecting that to go up to 3.7%. The market at the moment's got the RBA on hold after 3 rate hikes already this year. But certainly if that trim mean actually came out above expectations, then maybe market might start thinking that RBA may be live for another rate hike at some stage. So obviously very important data coming out locally on Wednesday. But anyway, look, to start the week, the key takeaway is that markets are trading risk on at the moment with obviously crude lower. And obviously the market now is waiting for some more headlines out of the Middle East to see how this plays out. So good luck with your trades. We'll check back with you shortly.